Well, clearly, I'm very pleased with reporting $21.6 billion of profit for the first 6 months. I mean, that's a return on tangible equity, excluding notable items, of 17%, which is a very strong performance. I'm also very pleased to announce a $3 billion buyback today and a 10-cent dividend. If you look at the last 18 months, that takes our total distributions to shareholders in 18 months to over $34 billion. And I think the standout performance, I think, is our ability to continue to grow revenue from alternative sources other than interest income. So our wealth revenue grew by 12% in the first 6 months of the year. That was a broad-based performance across all customer segments. We had double-digit growth in revenue within the private banking sector, within the affluent sector. Our value of new business in insurance was up 77% year on year. Now, the other thing I'm really pleased to be able to announce today is that we've not only confirmed our ROTE guidance of mid-teens for 2024 and our cost target of 5% for 2024, but we've also announced a new guidance for ROTE in 2025. The strong performance of the business gives us the confidence to say that we'll be mid-teens return in 2025 as well. So a broad-based geographic strong performance and broad-based business performance.
Banks have also been benefiting by the higher for longer in terms of interest rates, but consumers are slowing their spend. Can you give us your outlook for the next 6 months?
Well, listen, I think in the UK, if I look at the UK market, we reported profit before tax up by around about 11%. If you exclude the gain on acquisition of Silicon Valley Bank last year, we were up 11%. That gain was a one-off last year and obviously won't repeat. But that's a strong performance in the UK economy. Our business in Hong Kong, I think, reported profit before tax up around about 1%. We're seeing a resilient performance from our businesses. We saw some evidence of good balance sheet growth in Q2. Starting to see some early signs of growth in the balance sheet. It's too early to call it a trend, but certainly we saw some growth in our mortgage book in the UK, good performance of our lending business and deposit business in Hong Kong. And as I say, investors are investing. The wealth business, grew its revenue by 12%. So I think there are some encouraging signs in there for future economic growth. And there's certainly a strong, resilient economy at the moment.